Good morning, folks. Mark here at TapeTally.com for your Week 33 recap. This week we saw the American and Canadian indices move higher. The Russell 2000 actually outperformed for the first time in a long time. Actually outperformed to the upside, and this is actually quite a good sign. And one of the many reasons I have changed my ratings here. Um, I've actually upgraded all four American indices and the Canadian indice, which I had as bearish. These four were neutral. Now I've switched those to bullish, and this one is switched from bearish to neutral. Now, um, this I'm probably jumping the gun a little bit here. I would say that I'm cautiously bullish, but I really don't like using that word too much. So I'm just going to go ahead and go straight to bullish here. And I mean, if it doesn't pan out, we'll change that back to a neutral or bearish depending on the price action. So yeah, let's jump right into the analysis. Take a look at the SPY, and I'll kind of be outlining a lot of the reasons why I'm changing my outlook on the markets to a little bit more positive, and I'll probably start getting a little bit more aggressive with my trades here. So as you can see, we're basically stuck in the middle of this range as well. But if you look at this right here, the market looks like it really wants to take it out. Now, like I said before, I'm probably jumping the gun a bit when it comes to switching to a bullish standpoint, but I think it's inevitable here that it will break and continue higher, at least until until this area here. That'll be another important level, these 2008 highs, at 150, what is this, 155-ish area. But we've got a long way to go until then. That'll probably be the top of the channel there, and yeah, so that's basically what we're seeing across the board here. The Nasdaq. We see the Nasdaq moving to new highs here on a strong move. Let's move on to the Russell 2000. We talked about this pennant pattern, and it looks like it does want to break out. I mean, it officially has not, but with the strength that I'm seeing in underlying stocks, I think it's inevitable here that it will break higher through this $83 range here, moving higher. Dow Jones, same kind of deal. We're taking out the 2012 highs, and actually this will be highs for the last, well, whatever, 4 years, basically. Gold, I continue to be bearish on gold, although, this is kind of holding pattern. After we've had this breakdown of the trend line here, it's kind of just been sideways on low summer volume. But I expect the volatility in this to pick up at some point here as traders return to their desks. I think that this next week here will continue to be low volume, but as the first couple of weeks of September come along, we'll see volume start to pick up and probably some volatility. So we'll probably see a move. I'm thinking we'll see more movement to the downside here, but this holding pattern here, I guess we'll just have to see how that plays out. Oil, I still have my bearish stance on that one. I mean, it's kind of stuck in this range here. We talked about playing that bounce in early May, but for the time being, I'm still neutral on it. Although, what I would like to see here is kind of a break of this downward trend line and then a break from a rising bottom, which is actually why I've also changed my rating on the Canadian markets here. Now, we saw this bounce, looks like 5-6 times off of this $24 support on EWC, and it finally broke its downward trend line, which is a first good sign. So as I've talked about before, I mean, you can buy breaks of downward trend lines, but I find that to be a bit more risky. What I like to do is I like to wait for confirmation, especially when we're talking about kind of intermediate, longer term time frames. So what I'd like to see here, for example, is a break of the downward trend line, which we've seen, then a consolidation. consolidation through time or through price here as it pulls back, and then another break, um, from a rising bottom. So basically, action like this. Let me draw it on here. So if we went like this, and then like this, oops, I can't draw any further than that. Oh yes, that's right. It won't allow me in TradeStation. But basically, if you follow my mouse here, we would see maybe a little bit more upside action than either, a consolidation like this or a bit downwards, but still making a higher low than this $24 level, and then a break above the $28 level. That's what would kind of change my stance from neutral to bullish on the Canadian markets, and also a move in. If we were to see gold and oil start to print more neutral or bullish patterns, I would probably definitely be more confident with the Canadian market moving higher, as it's kind of a resource based economy there. So what I wanted to talk about, the reason why, another big reason why I'm seeing a lot of underlying stocks starting to hold their breakouts. For example, I know I talked about this on Twitter, and let's move it. So some of these stocks. So we move this out. Okay, so we had this large move here, July 17th, and it's basically been consolidating, but it's been holding. It hasn't really come back to test its let me just take off these. Just look at strictly price action here. Oh. Okay, so we saw this move. This was quite a huge move. I mean, I wouldn't really want to chase that, especially given the market conditions at that time. I definitely would not want to chase it. But as we can see here, as time has progressed, yes, it's tried to make a new high and somewhat failed, but not really failed. It's basically back down to its buy point here. So I would say that that's still a valid breakout for a long term. Cores, I like the fact, I think this was basically an earnings move there. I like the fact that it not only held its low here, that it actually moved higher on the fourth day after such a large gap. Now, we can expect this to somewhat backfill here. If it's strong, I doubt that this gap will be filled for a number of months, maybe years. But we'll see how that reacts. I do have a position in this one here, so we'll definitely see how that one plays out. URA, I like this break of a downward trend line. I like that break, and then also, sort of a break on higher volume here. It's not a great pattern, but just kind of one if you play ETFs, I think that's not a bad risk reward opportunity for that one. These are the ones I set up, I believe, during the week. So if we look at this one, as I said before, now, I mean, there's been a lot of patterns like this even throughout these last few months when the market hasn't been that great. There's been a few of these patterns break from a decent chart pattern on higher volume. But the difference is with these next five stocks, you'll see that they've actually held, and the next day they actually gapped and went higher. Now, mind you, what I like about what happened on this day was that it held its close. It didn't pull back. The next day it gapped open, went higher on people that were a little bit late entering on this day, and finished considerably lower than its high, but still higher, and it's held this gap, and that's good action. It's good to see. Same with this one, moved higher. We talked about this. I know I'm sort of reiterating these setups that that I put on the site earlier, but I just kind of wanted to verbally give you my thought process with that one. So here we saw higher volume. I mean, the volume's not fantastic, but it did break key resistance level and it held it the next day. Same with Journ. We have you've got some breaking of downward trend lines, and then you've got a break from. I mean, you could just draw this right here. Actually, would be fine. And you've got a break from an ascending triangle here on significant volume, and it's holding the next day, which is a great sign to see. Now, I haven't seen this in a while, but all of these stocks seem to have held. Look at this one. This is a great chart pattern, hitting a all-time high, I believe, which is even better. I love to buy stocks that are making new highs because there's no resistance. It's kind of just open fields, blue skies. So got a break from a pennant pattern on significantly higher volume, and it's held. It barely even came back to a quarter of the breakout candle here. So that's a great looking chart. Now, I'm not saying to go out there on Monday and buy everything. Like, I mean, I think it's with the way that the market's sort of moved. Let's go back to with the way that the market has moved in the recent month or so. I think we're due for a bit of a pullback here, especially at this level. However, we'll see how that reacts. I think that with the underlying action that I'm seeing, we're going to see higher markets here in the next by the end of the year. It's going to be higher than it is now. Let's go back to, okay, that's the one we did. And this one here, great chart pattern. I like it. I mean, on the Friday here, it didn't actually hold its breakout. That's still decent action. We've seen a break here. We saw a break here to a higher level. Then it consolidated here nicely and had a nice break on Thursday. So these are definitely some things that I look at all the time. I'm trying to track a lot of the breakouts, see how they react the following day or the following week, and that's how I kind of gauge if the markets will be moving higher. So hope everybody has a great week. Expect volumes next week to be quite low, like I said before, and there's a lot of positive action there, and I think it's setting up for a move higher here into the end of the year. Everybody have a great week. Thanks.